All right. Good morning, everybody. On the screen are the spot gamma levels. Might make it easier if I kind of give them a better backdrop. SPX on the far right with the ES, and then SPY, QQQ, and then the NDX on the left. Take a screenshot, go back and mark those levels on your chart for the day. I just checked. Tier 1 Alpha has not sent out their email yet this morning, but keep your eye on that. Get your gamma levels. Those will come in handy if we have another 0-day phenomenon again today. Before we get too deep into the charts or into anything else, notice where we closed on the week again last week, inside the box, right? So that was the high, that was the low of the expected move projections. We sold out and rallied back up to close inside of the box. There was a strategy that I had developed a couple of years ago that focused on going long on days where we broke outside of the box to the downside and going short when we broke out to the upside. Nothing works all the time, but statistically that wins more than it loses. So then depending on, the money management that you want to use, even trading a 1-to-1 instead of something like a 2-to-1, 3-to-1, when your win rate is greater than 50%, you can run a 1-to-1 strategy and still be positive. So it's something to think about. It's a pretty simple system, all things considered. So this week, the big deal is CPI and PPI. That's going to be the biggest ones, but it's not the only thing. There's a lot going on this week. Those two are just going to be the biggest. They are midweek and later. So Wednesday we get one and Thursday we get the other. So you got to sort of have this expectation that it's going to be a choppy, more muted Monday and Tuesday, early week, just like last week was anticipated to be choppy and muted in the early part of the week. Now that we are past FOMC, the Fed is no longer in blackout mode and they can come out chipping teeth, and they have. So what you really want to try to focus on is the overall narrative. Each one of these individuals wants to be seen as an individual. They're coming out with their own message, they're saying their own thing, but they all have to carry this one single tone. Identifying that is going to really carry you a long ways. So continue to keep your eye out for that. Looks like we got the spot gamma founders notes. I'll pick it up on the other side and we'll circle back to it. So for today, 10, 11:30, and 12:30. The additional auctions at 11:30 are going to be what hold my attention the most for today's material. But if you're newer to the different economic events that can come out and their impact on the market, FX Street is a good place to go to. It's free. You don't need an account. I don't even recommend making one, because you can have a free account and they'll just spam your email like crazy. So it's not worth it. You don't really gain anything by having an account anyways, unless you want to have a paid account. That's your own issue. But here they will rank the anticipated impact of the event. So really light yellow implies it's not really historically an impacting economic event, and then a darker orange and even a solid bar, if we were to go down far enough here, implies that this has a history of being impactful during that report. So for today, you can see we don't have a solid bar. We do have a couple in the later part of the day for Japan, Australia, but that's going to be way later tonight. Not really an issue for us on the intraday today. Just those auctions. I'm really focused on those. It seems like I'm the only one who ever is, but watch out at 11:30. ECB Lane is scheduled to speak today. It's European Central Bank. Probably want to find out if it's live or not, or if it's recorded, if he's going to take questions, where it's at, right? If it's, a luncheon at AARP or something, it's not going to be an impactful situation, right? So when it says something like this as a speech, try to hone in on what the speech is, where it is. I used to not do that. And then, of course, you prepare for some sort of impact on the day and then find out later, oh, it was just a recording and they didn't take questions. And it was at, some luncheon somewhere, and it had no anticipated impact on the market whatsoever. It was a waste. So hone in a little bit. I've mentioned this once or twice before, but I don't mention it very often. And mainly I just keep forget to tell you guys. One of the things with the morning briefing that I struggle to do is point you to resources, right? I know a lot of people watch the morning briefings because I'm giving you information for the day, but that's not why I designed them. I designed them to teach you how to do this for yourself. And I figure the best way to teach you how to do it is just to actually do it every day and let you see it done again and again and again. So with my goal being to point you towards resources and teach you how to use those resources, there is a resource right here, but I rarely ever mention it, mainly just because I forget to mention it. It's called Tick Strike. I'm not advertising them. I'm not telling you to go buy it. You don't even need to buy it. It doesn't even matter if it's slightly delayed. Turn this thing all the way to the right, and when the S&P starts picking up flows, it's going to make a noise. That's it. It'll get your attention when you're watching a video, looking at charts, doing whatever it is that you're doing. If we start getting flow greater than the flow that we've already got happening, this thing is going to make an odd noise that probably none of your other devices are making, and it's going to get your attention. I use that frequently, but I have Jigsaw, so I use it something very similar to it. And you can change it for different markets. Its default is the S&P. So you don't have to set anything. You don't have to buy anything. Just take that thing and turn it to the right. It's the little bobble right there. Just crank it over, and you'll hear it when we start getting flows. Cool. It's as simple, easy, nothing to it. All right. So as I mentioned, it's anticipated to be a muted or a choppy Monday and Tuesday. We can see, looking at the cumulative overnight volume, a real lack of market participants. Generally, I like to see this thing above, 85 to 90. Sitting in the 100s is good, and we're sitting down around 58. Now, there's no magic to this number. I've been looking at this cumulative overnight volume for a couple of years, so I kind of know what normal looks like. The red line is showing an average. It's a default within the thing. I didn't set it, so I can't even tell you what the average is. But when we're below say 80 on the morning, that is an indication of everybody sitting out waiting on something. Now, this could be just for the morning that they're sitting out for the morning, or it could be that they're sitting out through most of the Monday and Tuesday waiting for this big CPI and PPI print to come out. Well, I don't know if they're going to be big, but yeah, big events, right? So let this inform your trading decisions today. When you notice this real low volume here, when you're looking at the trading dome on your broker, look at how thin the ES is this morning compared to what it normally would look like. A thin market can really move, right? You do VSA analysis and kind of realize that things move differently with a lower volume. We did have a nice rally last week, which sets us up across the market for this really big bar that we have to negotiate. So 50% of that bar is worth marking out. That would be 41.20. As long as we maintain above that 50% bar level, then we could continue to grind up to that 4,200. 41.63 is our line in the sand. We got to get above that level to trigger the rally up into 41.83 and then up into that 4,200. The fact that we're gapped up this morning, and it's not a big gap, it's not a massive gap, but we are gapped up, gives me more of a bearish bias, at least to start the week. Yep, there's a number of markets that are closed. And as usual, it's not this broad sweeping list, but if you ever want to know, there's a company called Trading Hours. I've had people tell me that they've Googled and searched and spent hours trying to find this information. It literally, it's right here. Tradinghours.com. It's free. You don't have to buy anything. And it'll not only show you what is open or what is closed, but you can click on their market and it'll tell you what holidays there are and if we're in a holiday or not for that. The trickiest thing is trying to figure out what their hours are. And I use Thinkorswim to figure this out, just to make things as simple as possible, right? Use the tools that you have available. So if you, for an example, take your Thinkorswim chart, let me just get rid of all this stuff for a moment. And on Trading Hours, it tells you the time zone, right? So it's not just Tokyo. It would be the, we'll just click on one of these and go to London. So when I scroll down here, it's not just London, but it's going to tell me what time zone in London. And then you can set your Thinkorswim chart to that time zone. And you know, Trading View, most brokers are going to give you that opportunity. So once you have that, come over to the Thinkorswim or to whatever broker you want to use. Go to the gear icon, and right here on time zones, you can set it to the time zone that you're looking for. And then that tells you exactly what time it is over there. And you can match that with what time it is for you here now. And now you've got that equivalency, right? It solves the question for you. You don't have to do crazy math or anything like that. On the home screen, Thinkorswim will actually show you markets around the world. and whether they're open or closed. But Thinkorswim doesn't actually check to see if they're open today. They just check to see if it's within the time frame that they should be open. So right now in Europe, for an example, it's nearly 1 o'clock. Thinkorswim would say, sure, they're open, even though they might not be, right? So you can't really lean on Thinkorswim to validate the market that it's saying is open or not. All right, so we had a rally base drop. We had a drop base rally. Distal line is 40.61. And I'll use some ticks. $40.62 and a tick. So your proximal line, 40.74.5. While this is an inside day, I wouldn't put it into the category of trading it as an inside day. There's no compression here. There's none of the other data points we would use for an inside day match when it's such a large, massive candle. All right, we got a very narrow IB, initial balance. The gap is closed from Friday to Sunday night. Right now we have another gap from where we closed Friday to where we are going to open at 9:30. We have an MDP. It's a missed daily pivot. Notice how far away from the pivot we are. It's all the way down here, and it's because of how far we expanded on Friday. So we are above the weekly pivot, which is bullish in context, but we have an MDP. So markets tag their daily floor pivot at least 80% of the time on average. When we're not doing that, we're in the 20%. We're doing something that we normally don't do. There's a strategy behind that. It's not mine, but you can search for it. It's called an MDP, missed daily pivot. I don't trade the strategy, but the strategy is useful in analysis. So it kind of provides some context. It's worth learning, even if you don't want to trade it. I am continuing to focus on all of this zone here from Friday. Call it unfinished business. You can use supply demand metrics. I just say it's liquidity and unfinished business. When we get back up into that zone, there's very likely going to be trades done that didn't get done last week. It doesn't quite fit a rally base drop on a 5-minute, but depending on what time frame you use, it lines up. I would look at it as a zone also, say within 5 points of that, and I would extend that zone on each side, right? So 5 points above, 5 points below. You could tighten that up a little bit. I'm being generous with the 5 points. Just remember, liquidity resides on the other side of the pivot. So when we run up, not if, when we run up and hit that, we're very likely not going to hit it and just bounce right off. We're going to shoot through it to the other side because that's where liquidity is at. When it comes to pivot point trading, don't expect price to stop at the line. Expect it to fall short of the line or to overshoot the line, because traders will front run it, worried that they're not going to get their trade. They'll get in early and that'll stop it from hitting, or they'll drive it right through to the other side to get into the liquidity on the other end of it. So for every trader that I hear that say, oh, I was waiting right down there and it missed me by 3 ticks and it ran away, or I was waiting down there and it ran me over, stopped me out, and then it ran away. What? You thought it was going to stop on the line? $10-day, 30-minute volume profile. There is no pattern here. If we're looking for the classic shapes, the capital D or capital P, lowercase b, we don't have any of our classic shapes. We are above the point of control. When we're at the lows, we expect to go to the highs. When we're at the highs, we expect to go to the lows. If we come down towards the point of control, we'll expect it to provide some sort of reaction, not necessarily a support, but a first response play, maybe a pause in the move of the market. If we drop below that point of control, there's an air pocket, so we're very likely going to move through that real quick. You can see how we've moved through that area before relatively quick. There wasn't much there to slow us down or to get entangled with, so we just moved through it. That's very likely what will happen if we drop through it again today. Think of the 4132 cog line as your line in the sand. If we drop below that, we're very likely going to go to 4100 pretty fast. Five-day, 5-minute. Call this mapping out the 5x5. As you can see how narrow and muted we are. And this is a good screen to point out last Monday. So remember, we had FOMC on Wednesday, and during the morning briefing on Monday and even on Tuesday, I had mentioned the likelihood of being in a range bound market as we wait for FOMC. Now, Tuesday, we had that bank news, so it didn't care, FOMC or not. But Monday is a really good representation of a market waiting on an economic data point later in the week. And it's exactly what we have so far this morning. Also, look at Monday last week and how it was flirting with the highs from Friday, just like we have this morning. So a lot of similarities here, right? What do they say? History doesn't repeat, but it sure does rhyme. So for the kind of trading day that we could have today, if it follows true to form, we're very likely going to maintain this narrow muted range with potential overshoots either to the upside or to the downside or both without ever really going anywhere. Should news hit, then it's going to look like Tuesday, where we were range bound and narrow and low volume and compressed, and then news came out and gut punched this thing and down we went. So you've got two really good examples for a roadmap this week. Taking it out to the daily, we are 0.5% above the 10-day moving average. the cycles are really small right now. So if we look back, these broader swings, and now we're getting into these really narrow swings. We're right on the edge of a significant change in market dynamics. We're going to stop doing something that we have been doing for a while now, and the market is trying to position and change. The Fed has been raising and raising and raising and raising, and they didn't exactly say that they're done raising, but they've given every hint possible that the last interest rate hike is going to be the one for a while, and that they're just going to hold the line here and see how much damage they've already done, right? Because the data is lagging, so they got to wait, pause, and see, have they tightened up financial conditions enough or not? We're nearly 1% above the 10-week. We still haven't come back down to complete the cycle, right? Got these waves. I would still look for the 10-week crossover. And if this graph here is throwing you off, consider what it is that we're really talking about: the 10-day moving average and the 10-week moving average. That blue line is the 10-day, because I'm on a 10-day chart. I'm on a daily chart. So that tool that we look at is just looking at how far away from this 10-period moving average we are. And are we above it or below it? Is, that's it. It's as simple as that. I designed that thing because if you consider the 10 the mean or the average, and if you think about a market that gets too far away from its 10 reverses back to its 10, but each market has a different distance. The distance that Tesla gets from its 10 before it likes to reverse is different than the ES when it gets too far away from its 10. And so how far is too far for whatever market you're looking at? That's the only thing the indicator is doing. So we made it through the 10. It is underneath this right now, 41.36 on the daily. If we fade down this morning, we're going to interact with it, but it's basically sideways at this point, right? It's not like we were in a trending market that was riding above the 10 and tagged it and riding in 10, right? It's not like a ride the 9 setup like back here. We've crisscrossed back and forth through this, so it doesn't have any respect as any sort of a bounce or a support or a buy the dip spot, anything like that. Not now. And for the weekly, same thing. We've crisscrossed through it enough that we have no price has no respect for it right now. All right, Bitcoin is down 6%. There was an article on Bloomberg. Well, not just Bloomberg, but one of the largest Bitcoin exchanges has had a lot of outflows and have halted those flows twice in the last 24 hours. Bitcoin is one of the liquidity tells that we use. And in the pre-market, this GBTC, it rarely ever gets enough volume to actually register a change. The fact that we're seeing it down 5.5% this morning, that really gets my attention. The China ADRs that we monitor through the ETF KWeb is down nearly 0.5%. But we are primed there for a really nice TRB setup. So we'll just have to see how that follows through. And let's back it up just a little bit and you'll see the H pattern there. The financials are up this morning, which, I mean, come on, they're due at this point, right? They took a significant beat down last week. And we can see the rally that started on KRE regionals. And I'm hearing a lot of shenanigans out on Bloomberg and on others where they're bringing people in talking about how the banks are such a great buy because of how far they've fallen. Come on, man. They need to sell their shares to someone, right? That would be you. So they're trying to convince everybody that the banks are a great buy at this low. And yet they were also talking about how we had only recently gotten back above that 2007, 2008 high, right? It took what, 12 years to finally get through this key level. And now we're back down pressing against it. And, you know, there's two sides to that coin, right? So they're making it sound great. Oh, banks are such a great buy right now. Whatever. They are still holding a ton of it and they need you to buy it so they can get out of it. So it is up this morning. And I'm sure that a couple of these different regional banks, you know, some of them moved, man, more than half of their value last week, right? More than half their value on some of these names. So daily plays in and out, day trading, if you can find the liquidity, not much on the options side for the names in the KRE, but share wise, yeah, I mean, I can see some day-to-day plays, but looking for a buy and hold off of these lows for, you know, a solid swing in regional banks long, nah, I don't think so. Not me. The charts might tell you that if you go out to a monthly or a weekly, but the daily is pretty damaged, and you'll find it hard to perform that kind of analysis that you need on the daily charts right now. Yeah, they would certainly be a good short after they begin to roll over again. This is the KRE ETF, and inside of this ETF we have these 8 names. There's more than these 8, right? But I try to find the highest market cap names in the ETF, and then I build this grid. Obviously, I haven't been over here for a while because FRC is just sitting there spinning. But so when we look at these names and you go look at the options, they're not very hot, right? They're kind of trash. So share wise, they could provide some opportunities. So whether you're using DPST or KRE, it's still regional banks, right? Except this is a bullish. So when it comes to something like this, since it's a product that I don't know just offhand, double, triple leverage trash crap. I don't have any input on double and triple leveraged products. And I'm not even going to look at it. Good luck with it. Bonds are down. Bitcoin is down. We need a liquidity tail here. Let's see. All right, 16% of the S&P is up 0.5%. And only one name is down at least 0.5%, and that's Meta, which was weak on Friday too. 15% of the NASDAQ 100 is up 0.5%. So we're mildly, slightly bullish. And the fact that we're gapped up on a Monday, only even mildly, puts me in a more bearish stance than I would be if we had gapped down this morning. All right, so before I make my adjustment that I always make, this thing won't start turning red or green until the market has moved 0.5% or more. So we can look at this and we can see already what's getting flows. Now, Disney's got earnings coming up, but we can see banks are getting flows, financials, energy, and then a couple of FANG names. Tesla, after the beat down, is getting a little bit of push, and Meta's still weak. So really, we just got a whole lot of nothing. And we can't have a bullish market without financials. right? Not one day. We can do it one day, no problem. But overall, we can't have this bullish backdrop in the marketplace without strong financial names. And I mean, I think it's pretty clear that we don't have strong financial names. We got a bit of a rally because of how far they've fallen, but I don't think anybody thinks that they're strong. And flipping over to the NASDAQ, we got nothing. So we use KWeb. We use Tesla. NVIDIA was added to that list from time to time. And then Bitcoin. We can do the FANGs later once the NY FANG opens up, but individually we'd have to do it, all right, one at a time, like Apple and Microsoft, to kind of jump through the list. When we go through looking at everything this morning, trying to ask, where's this bullish bent going to come from, or bearish if we're going to flip over? We don't have it yet. When's that announcement going to come out on Baidu? Or had it already come out? Well, if there was already news, already an announcement, this is up, but not with any flows. There's no volume here. This isn't inspiring. Baba's got more flows than that, and it's down. PDD would be another one. And JD. So we're not really seeing much from the China ADRs. So nothing from the semiconductors. With all those flows we were getting last week, AMD really didn't, or Amazon really didn't get much love out of all of that. Keep my eye on Amazon for an opportunity today. At least it doesn't have that big, massive Friday candle, right? And this muted breakout of that doji from Thursday kind of sets this thing up nice. We got this really big gap to fill in Tesla. Back to 180.60. First, it's got to get into the channel and then come out on the other side of the channel. This morning, it's up to 173.85, 84. So it's very nearly halfway through this channel. That would be the 1, 2, 3, 6. That's basically where we're at. So if we get above that, target is 178. And then that gap fill at 180.60. Otherwise, the anticipation will be that we reject at the 1, 2, 3, 6, and we begin working our way back down. There's a 50% level to keep your eye on at 175. That's going to be a difficult level to get through. All right, we got a lot of unfinished business in Apple back around that 176. It's down just a little bit this morning, which makes me more bullish than if we were up this morning. So one of the things about Apple that I don't know, it's not unique to Apple. It's just you see it more in Apple than anywhere else, is this thing has a history and a habit of going way farther than we would expect the market to go, right? Every market has a measured move. We know how far it should go on a 1 minute, a 5 minute, a 1 hour, daily, weekly, monthly, yearly. Every market has a measured move on any time frame. Apple has consistently and repeatedly moved farther than it should move. And then, of course, everybody tries to short it because of how far it's gone, and it just keeps on going. One of Tom Sosnoff's biggest losses pre-COVID, I haven't really kept track of them since COVID hit, but was when he tried to short Apple and Tesla after they had run those monster rallies that they had done when they were doing a stock split, and everybody just bought the heck out of them. I think it was 2019. I think it was 2019. And the only reason he shorted it was because of how far it had run. It didn't work out either. It ran him over and kept on going. So we got this rising wedge in Apple. It's breaking out of the top like a blow off top. Rising wedges are supposed to break to the downside, but often they will get this last hurrah breakout to the upside before they fall. Also, when it comes to the rising wedge, notice that price went all the way into the very tiny, very, very end of it. That's a hint that this is not a rising wedge that we want to trust. When you do technical analysis and you draw your lines, there's always a question about, should I stop, at the first drawdown pivot point? Should I use a swing over method? In the swing over method, you would stop as soon as you hit something. There's no perfect way to answer that question, but you try to find consistency in how you do things so that you do it the same way every time. If we were to use a swing over method instead of using the first higher low pivot here, it changes the shape of it just a little bit. We've still gone too far into that apex than I would like, but at least it puts it back into a more structured, defined space, the way it's supposed to be. With this unfinished business, I would look to see if we're going to, get through that level in one shot, which I think would be nearly impossible, or if we're going to get up in there, get tangled up, and pull back a little bit. I'm not expecting it to necessarily dump, but I am expecting a first touch failure, which is a play that I like. It's a trade strategy where you take a small trade in the opposite direction short term So, day trade, maybe a trade till Friday kind of play, but we got to get up into that level first. So when it comes to trades this week, keep your eye on CPI and PPI. Look for any indication that the data got leaked. It's not something that happens all the time, but it wouldn't be the first time where suddenly the market just latches a hold of something and kind of runs with it. We got bonds breaking down this morning. And the dollar lower than Friday, but off of its lows. So we do have that structural level at 101. It's holding there. And as long as the dollar is holding above that 101, I don't think we're going to get above 4,200 in the S&P. Right? It's not a perfect correlation, but as long as we're holding above that 101, I don't think we're going to get above 4,200. So we see the dollar get below 101, close below it on a daily, and then, maybe actually start driving lower. I would look for a significant continuation in this bullish backdrop that we've got in the market. Otherwise, start seeing the dollar run back up. Just getting up to 102, I don't think is going to be enough. But if we get the dollar, say, above 102.5, maybe even into that 103 area, then definitely the S&P below 4,000, maybe even getting back to that 3950 area. We're very likely going to see a megaphone style week, Monday and Tuesday. All right. So I mentioned it earlier. Just look at last Monday. I wouldn't necessarily use Tuesday because Tuesday was news. But look at last Monday. Right? We had a pretty nice run on that Friday. We were pretty muted through the Sunday and into Monday Globex. And on Monday during the day, we rallied up just a little bit higher, fell back down. We tried it again. We fell back down. At the end of the day, we really weren't much better off than where we were Friday at the close. And we were range bound all through that Tuesday as well. So, we start building that megaphone pattern. We would expect it on both sides. Tuesday's sell-off, just scratch that. It was news, but we would have expected it to wick down. It would look like this, but on Tuesday on the downside, right? And that's really the expectations for the week. So if we break out of Friday's level today to the upside, it's very likely that we're going to sell into strength, buy into weakness. I haven't looked at the gamma report, but it's probably a positive gamma, and that's what we do with positive gamma. Sell into strength, buy into weakness. If it was negative gamma, then we would be, buying the dips. Expecting a stretched market. So that's what I got for you guys. Watch the clock. Anticipate that we're going to push past pivot points, but still come back inside the box and maintain the range into CPI and then PPI. Everybody be careful, be safe. Have a good week.